All right, good afternoon. My name is Florian Grumes. Let's see if this works. Yes. Hello, everybody. Yes, my name is Florian Grumes. I'm from Munich, Germany. I'm the CEO and founder of Midas Touch Consulting. We are a consulting group of people basically focusing on precious metals for the last 20 years. We are in cryptos for the last 5.5 years. We are currently advising a big company here in Malta. They're building an exchange. And my topic today will be cryptocurrency trading. So first of all, I would like to know, maybe quick, any one of you who's trading cryptocurrencies? Traders? Yeah, a few. Any one of you who who wanted to be a trader and became a hodler over the last 9 months due to the bear market? Yes, I think quite a few. And that's normal because the markets are very difficult and cryptos are not different than any other financial markets because it's all about psychology and in the end it's about yourself. Before we start, obviously I have a disclaimer because I don't know the future, so does nobody else in this room and nobody in TV, no newsletter, nobody knows it, okay? I don't have a crystal ball, I said this very clear, so let's start. Cryptocurrency trading is the topic, and first of all, I want you to know that 90 to 97% of all traders and investors finally lose money in the markets. This is for all markets, whether you trade commodities, forex, stocks, bonds, or cryptos. And especially in cryptos, due to their extremely volatile nature, it's even more likely that we talk about 97%. Okay? And why is this? First of all, it is because usually most of the people who start investing do this without any plan. And as you might know from a business, 75% of all the businesses are failing because they didn't have a proper business plan. And trading is a business. Same as investing, by the way. So you need to have a plan and then trade your plan. This is a very complex thing that you need to write down. You need to learn a lot about it. You need to educate yourself. This takes time. So my first and most important advice is paper trading. Don't trade with real money. Okay? Until you finally get comfortable and you can see that you have a positive result over at least 50 or 100 trades, at least I would more suggest like 1,000 or 10,000 trades. You need to have a plan. I just have 20 minutes today. I can really just briefly touch on some of the most important things. But if you have any other questions regarding how you can set up a plan, catch me after the presentation, okay? The second reason, position sizing. People don't use position sizing. There's a very simple insight. Let's assume you bought Bitcoin at 12,000 somewhere in early this year, and now you are at 6,300 right now. You're down 50%. Bitcoin has to recover 100% just to get you to break even. If you bought some altcoins somewhere in January, February, you might be down 80 or 90%. This altcoin has to recover 1,000% just to get you to break even. These are gains that are very unlikely. Yes, last year was exceptionally outstanding gains. Anyone who didn't make money last year, sorry, it was really easy. But this year the truth is coming also to the crypto markets. And position sizing, basic rule, don't invest more than 1 or 2%, the full position of your portfolio, okay? Because if you have a drawdown, statistically 10, 15 losing trades in a row is very likely, it can always happen. If you risk more than 2 or 3%, your portfolio is already wiped out. So if you focus on just 1 or 2% position sizing, you're already safe and you will find a way to survive in the long term, okay? Very basic, very simple rule, but unfortunately most of the people don't follow it because at some point greed kicks in. Oh, I need to take part in this ICO. Oh, I see this big pattern. I put everything in it, and then suddenly the market does something completely different. Okay. Third one is money management. That means you need to have a plan. Not only how much you start to invest, but you also have to have a plan. For example, when you exit, most people sell immediately the whole position. We at Midas Touch, we have a special strategy. It's called quad exit strategy. That means we basically sell 25%, another 25%, another 25%, and another 25% if the market goes in our direction, which makes it psychologically much easier to be in a successful winning trade. And it also helps you to let your wins basically run. So money management is very important. It's a big topic. There's big books. You can spend months and years just studying money management. But this is really important. And I mentioned it already, psychology. That's really the most important one. I think your trading success is 80% at least psychology. And this is a game with yourself. This is a game about becoming aware, who am I? What do I really want? How disciplined am I? How much did I do my homework, my planning? Do I follow my trade, my planning, my trading plan? Often, once you are in a position, fear or greed kicks in and you do the complete opposite of what you initially thought you wanted to do. Or you start trading without any plan and you just let yourself surprise what the market is doing, and usually sooner or later you find yourself in a losing position. Many people lose sleep over that. There's millions of examples of traders, of course, in the stock market and now in crypto as well, who basically destroyed their own life because they didn't manage that part of it. It's very, very, very difficult. It's very challenging. And usually the press, the media, the newsletter writers won't tell you that truth. They just want to sell you something, okay? So be aware that those four, just a starting point here, are some of the most important things you need to be aware of and work on before you actually really can even start and consider putting real money on the table. The solution, besides doing all this homework, is a principle-based approach. Principles are ultimate truth or propositions that lay the foundation for a set of beliefs or behaviors or a chain of reasoning. So, for example, I give you a very basic, simple principle example. You cannot give what you don't have. So, if I ask you if you have some chocolate for me, and you say, no, I don't have any chocolate, you cannot give me any chocolate, then we can start building a chain of reasoning around that, why I might not be able to bring chocolate for my little daughter tonight. Okay? Another one, a big one actually in life, if you don't love yourself, you cannot love anybody else. So that's a big one. Principles. Why for trading and market is this so important? Because this constant uncertainty of not knowing what the market is doing in the future, in the next second, in the next minute, in the next hour, in the next day, months, weeks. And you always meet people who are basically in the same position like you. They also don't know what's going to happen in the future. You need to have a set that helps you to stabilize. And if you build your trading plan and your trading strategy around principles, you have a very strong foundation to deal with these issues: psychology, fear, greed, and the uncertainty that is always in the market, because nobody knows the future. So we at Midas Touch have been spending the last 25 years extracting principles about financial markets, and fortunately they are also valid in the crypto markets. And the one very basic, most important, extremely simple yet very difficult one is, the only way you can make money in the market is by buying low and selling high. It sounds extremely simple, and it is on paper or here in this presentation. That means if you go long, you buy something and expect it goes up, you first buy low and then you have to sell high to make a gain. If you speculate on falling prices, you only have to reverse the order. You first sell high and then you buy low, and the gain is because the underlying asset that you bought probably then went down and you make a gain. So this is a very basic, very simple, yet extremely difficult principle. This is the only way that you can make money with your investments. You have to buy low and sell high. That means you have to figure out, is this what I'm going to buy now, low or is it high? And then you already have to ask you the next question, how can I evaluate this? then you need to figure out in what time frame am I moving around. Am I a day trader? Am I looking at minute charts, 10-minute charts? Then it's maybe that Bitcoin today is low in comparison to last Monday when Bitfinex spiked to 7,800, and right now we're trading at 6,300. Bitcoin then is probably low. But if you compare it to a year ago, or like last December, Bitcoin was at 20,000, now it's at 6,300. It's very low. But compared to like 2 years ago, it's probably high. When we traded around 1,000, we're 6 times up. So what I want to tell you here is you need to become aware in which time frame are you actually planning to move yourself around. That also depends on the environment that you personally live in, your family setup. If you're an employee and you're working for somebody else from 9 to 5 in the afternoon, you cannot be a day trader. If you come home and there's family waiting for you, you don't even have time in the evening to plan your trades. So then a swing trading approach might be the right one for you. Planning trades that you will stay in this position maybe for weeks or even for months. If you say, I don't want to do all this, I just believe in crypto, there's the big revolution, and in 5 years prices are up, then you are more likely an investor. Buy and hold approach is then the right one for you. The thing that I want to tell you is you have to ask yourself these questions to become more aware about who you are and what really fits your personal situation, because we're all different in terms of our personal life setup. So buy low and sell high is the magic basic principle that you need to follow. And I just want to give you this advice. Whenever you start in the future buying cryptos, ask yourself, am I buying low or am I buying high right now? Another one is to let your winnings run. So as we don't know the future, but we know that trends usually are very strong, and the trend is your friend, you probably heard that already. If you find yourself in a winning position, you want to let it run as far as possible. Psychologically, we're kind of hardwired to take profits very fast instead of letting the winners run. At the same time, you have to make sure that you cut your losses short. So once you find yourself in a losing position, you need to get out of it. Finish the drama. When it's 10 or 20% down, okay, you can recover from such a loss. If it goes down to 50 or 80 or 90%, it's very hard to recover. I showed you this before with the money management. Once you're down 80, 90%, your chances of recovering in that position are very, very, very low. So, letting your winnings run, imagine you bought Bitcoin at 1,000, you saw, and you let it run until 20, big celebration, and now you're watching how Bitcoin is down from 20 to 6, and you didn't follow the other rule, cut your losses short. You gave back 14K on one Bitcoin. Money management-wise, you made big mistakes. Okay, if you personally decided in front of your investment 2 years ago, I believe in crypto, it's still totally undervalued, nobody's aware of this new sector, I bought at 1,000, I'm willing to stay in this position for 5 years, and you know that you psychologically, emotionally are able to sit through such a roller coaster when something goes from 1,000 to 20,000 back to 5,000, and who knows what's going to happen in the next couple of months. You need to have clarity about this. So this is the holy grail basically of investing. Let your winnings run, cut your losses short. And in any investment or trade, you always find yourself thrown in between those two tasks that you want to achieve, all right? So the same, of course, is true. If you cut your losses maybe too early, immediately after 5%, you find yourself in many losing trades all the time. At the same time, as I explained, let your winnings run is very difficult if it's such a volatile market like the cryptos especially, okay? So that's a quick overview about principles. And I also thought I'd show you a little bit about technical analysis. So just to give you an idea about where we are right now in the market. I called the crypto winter in January and February pretty much in time. People didn't want to believe that back then. Now it's more clear. We are obviously right now in a bear market in the cryptos, which is not a bad thing. It's normal. It happens in any market. And it gives us the chance to build projects, to have more time, to really work and lay the foundation for the next big wave that will certainly come somewhere in the future. At the same time, it also is a natural process to get rid of bad projects. And I think you remember that the speculation frenzy was totally crazy in the second part of 2017. And there was many scam projects coming to the market, many unserious investors. And that's basically a natural way of the market getting rid of all these kind of things. So that's where we are right now. I don't know what's going to happen tomorrow or the next week or months or year. At some point, this bear market obviously will end. And to take a closer look to this, we want to first look at a weekly chart of Bitcoin, then at a daily chart, then we take a quick look at sentiment, and I also brought you a seasonal chart. The first thing, I mean, right now, crypto is already kind of a contrarian investment again. So if you listen to the media, they told you in 2011, Bitcoin is a bubble. They told it in 2013, actually 2 times. And of course, last year, December, January was a bubble as well. It could be that we need such a long period of digestion and correction and bear market. So maybe it takes another 1, 2, 3 years until the market is ready for the next big up move. Could be. Question then for all your projects, are you able to sit through such a difficult period where maybe no new money is flowing into the sector? It could also be that it happens faster. You could see it here. There was quite a short bear market. Who knows? Let's look at the weekly chart. This is the uptrend in Bitcoin. Has been tested in 2017, and then we had this parabolic spike into December, and since then we are basically in a correction. You can see that the swings, the spikes are getting more shallow. The volatility is still high in comparison to other markets, but it is getting lower, which is an indication that generally speculation has left the market. Bitcoin is moving close to this uptrend line. At the same time, we have a downtrend over the last 9 months, kind of a triangle. We have, should this triangle break to the downside, which is a possibility, Bitcoin could all the way correct back to the $1,200, maybe $1,000 level. That was the high, the famous high before the Mt. Gox crash in 2013, end of 2013, early 2014. That's a massive support zone, so that would be my absolute worst case. Could happen. But we have quite a few support zones on the way to that number, so I think it's unlikely that Bitcoin goes all the way back to 1,000, but it's not impossible. And if Bitfinex should implode, I think we're going there. But I don't have any indication whether Bitfinex will implode or not. I'm just telling you that this is my worst case scenario that I have basically prepared, and I didn't know what to do. So we have 1, 2, 3 big support zones, and of course the level around the 6,000 is very strong support. Bitcoin has been testing this zone now for like 4 or 5 times. We're sitting there. Let's see, if we break through this uptrend, we definitely go at least $1,000 or $2,000 lower. Yes, so you see we are very close to a very important point of decision in the Bitcoin market. Let's look at the weekly chart. You see here, by the way, the weekly chart is oversold, so as a contrarian, it's interesting that the market is beaten down. Stochastic is oversold. The daily chart, you can see this is an ascending triangle. No, it's a descending triangle. It's basically a bearish pattern. You see lower highs, and you have this horizontal support zone here. If we break through this zone, and we are close here, we're going at least to $4,500 to $5,000. At the same time, upside, we have this strong downtrend, which is strong resistance, and also this zone here is very strong support resistance. And the market, the daily chart is neutral right now. But you can see we are close. Something will happen in the next 2-3 months. I assume then we will have more volatility coming back into the market, and we want to have a big move. Let's quickly look at the sentiment. I take this data from Sentiment Trader. It's a very good website for quantitative numbers on all financial markets, basically. Currently, the sentiment in Bitcoin is neutral, while the Fear and Greed Index, which includes all the altcoins that have been beaten down tremendously this year, still signals extreme fear in the market. So from a contrarian perspective, you want to be aware. It's not, right now the market is kind of like singing you into sleep because it's so, the volatility has come down so much, it seems like there's nothing happened. But usually this type of environment you see in front of the big move. So sooner or later there will be a big move coming back into the crypto market, and I suppose probably in the next 2-3 months. Seasonality wise, we have so far 8 years of history in Bitcoin. The seasonality pattern, that means usually kind of a rally into early summer or late spring. Then you have a long downtrend, which we basically just finished here. We are currently here. I don't know if it follows the seasonal cycle this year again, but statistically, this is what could be expected for the last 2 months of this year. We have DEFCON coming up early November, the Ethereum conference, which usually has a big impact on the market. Also, there's been talks about the Intercontinental Exchange launching a Bitcoin ETF that is basically backed physically by Bitcoins, which might have a very positive influence on the market. But, and this is something that I know from other markets, tax loss selling into December. Everybody who bought Bitcoin or cryptos during this year is underwater. If you want to basically reduce your taxes, it makes sense to sell into the end of the year. So it could be that we will still have November, December week, sell out the final one, maybe down to 5,000. And then in January, starting a new leg, new rally in Bitcoin, okay? So the conclusion is you need to have a plan and trade your plan. It sounds very simple, it's a big work. It's the same with the business plan. If you do your homework properly, you're well equipped to attack the difficult financial markets, okay? Position sizing is essential for surviving. Make sure don't make any position larger than 1 or 2%. At least this one will help you to survive. Psychology is at least 80% of your trading success. You want to develop a principle-based approach. If you want to learn more about this, ask me after this presentation. And cryptos and Bitcoin are still in a bear market, in a crypto winter. But crypto and blockchain are the revolution of our lifetime. I'm very sure about this. I didn't talk much about this topic now, but this is my personal belief. And I assume that many of you guys think the same. Okay? Quickly, you can get analysis and research on our website. We have a trading Telegram channel with trading signals. We have a mastermind group. So this is not the typical trading Telegram channel where lots of people post quite a lot of bullshit, but you just get really good signals, you could get good analysis, and you have like-minded people that really help each other. So this is our Telegram mastermind group. We do consulting for crypto companies. We have quite some knowledge also in mining, in jurisdiction, and of course in asset management and trading signals. We also have media coverage and promotion, and we do cryptocurrency trading and consulting for retail investors as well as for institutional money. Well, thank you very much. I hope this helped you a little bit. Pretty brief, quick touch on this big topic. If there are any questions, I'm ready to answer it. Thank you.
Thank you.
Hi. You're speaking just a bit about analyzing and chart analyzing, like with the lines. What do you think about the Elliott waves? I'm sure you heard about that.
Elliott waves,
yeah,
yes. Okay, Elliott wave is a concept developed basically nearly 100 years ago based on certain cycles in nature, Fibonacci patterns that you see in animals and trees and everywhere. It's a very exciting thing, like the nature aspect of it. The problem with Elliott wave is that if you put 10 Elliott wave analysts in one room, you get 20 different wave counts. So
Yeah, this is right.
that's the thing, like everybody can count the waves the way he wants, and there's no final rule, there's a lot of room of interpretation, and usually you always know it after the move happened, and then you get more clarity, and that usually is not helpful. So I use the concepts of Fibonacci, I use the concepts of retracements. So Fibonacci basically 38%, 50%, 61, 8% are the typical retracements of the market. So something goes up and then at least a third, half or two-thirds of the move will be retraced or corrected. That's a concept from Elliott wave theory, and I like it a lot. But I'm not too much into wave counting, because I think there are some basic patterns. I think it's interesting, but as I said, you can count all the day waves and you come all the time with different results. So I think it's not really helpful.
Okay, thank you.
Any other questions? All right, then. Thank you very much.
Thank you,
Have a good
Florian.
afternoon, okay?